JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 9th of July 2021. So yep, welcome everyone. Welcome to this Friday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we jump into those, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, as always, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically this research page, which we update on a daily basis. So yep, check us out here on jdbank.com and click on the research tab right there on the top. So now then, jumping into the charts, the first one I want to pick up here is Nikkei 225, so kind of I would say mission accomplished. And we have reached the 200-day EMA, the one that I was talking about and aiming for. Also, I was aiming for this 27,795 territory. I spoke about this level, but we overcame that and, yep, reached the 200-day EMA. So, in a way, this kind of, like I said, yeah, worked out nicely. So the index did close in the negative territory for the week, but remained, looking at this daily chart, remained above that 200-day EMA. So in a way, there is still kind of hope for the bulls at some point here to step in and drive this one back up. However, at this point, I will probably take a very careful and cautious approach because it just, given the fact that it's kind of showing weakness right now, so that's what kind of makes us worried here. My preferred option here to go for the downside, in order to go for the downside, is to wait for a drop below the 27,385 territory right here, marked by the lowest point of May. If we do get a drop below that hurdle, then yes, this will confirm a forthcoming lower low, and potentially more sellers could join in and drive this one initially towards that 27,000 mark, or maybe a little bit lower. However, I'll be very careful near that 27,000 territory. I mean, it's a nice psychological zone here, but if that gets cleared, then yes, further declines could be possible, guys. So, Shanghai Composite. Oh, by the way, in terms of the upside for Nikkei, well, the further, of course, we went here to the downside, the kind of the bigger the area here is between the current price, and this downside line. So, what I'll do here is probably I'm gonna stick to maybe some of these levels here. If we do climb back above the 28,118 territory, this could lead to maybe a bit of a larger correction to the upside. So basically, I'm not saying that this is where I'm going to start getting very, very positive, but if we do climb above this area, then I will potentially consider a possible larger correction here to the upside. Shanghai Composite drifted back up. Initially dropped below the 3,503 territory right here. It fell below that psychological 3,500 level, but as you can see, it's now kind of coming back, and we do have around 50 minutes left of trading here on the Shanghai Composite. And initially, like I said, yeah, we drifted lower. That was probably mainly due to the numbers that came out from China. Basically, we had the CPI figures coming out from China. Those were not really on the best side. I mean, they failed to meet their forecasts and also fell below the previous figures. So yeah, not a very pleasant moment here for the Chinese inflation figure, but yeah, as you can see, the investors kind of started picking up again here, and decided to drag this one back up, and basically it seems that we're gonna end up the week somewhere in this little range here. So for me to consider maybe a possible move higher, now previously I talked about this 3,570 territory, but probably now I'm gonna drop it here, and I'm gonna keep an eye on the I'm going to keep an eye on this, the high of this week, and let me just put this one somewhere else here. Let me just reuse it here. We'll keep an eye on the high of last week, this week, near the 3,580, 58, 59 zone, approximately around here. If we climb above it, then we would also climb back above the 21-day EMA. And so far, I mean, the situation here is like this. Basically, yes, we will most likely we will end the week in this little range still, and that's why we're gonna, all eyes are gonna be on next week. So jumping into Hong Kong's Hang Seng index very quickly. So this one is a little bit looking worse than the Shanghai Composite, and as you can see why. I mean, we drifted lower. We kind of reached one of my targets here, the 27,040. I mean, we hit the level even below that. And let me just probably recycle one of these lines here. Always recycle, guys. There's a hidden message for you there. 26,861 territory. That's what we managed to reach today. And as you can see, now we're back. We're back kind of back above the 27,000 mark, and we're kind of approaching that 27,505 zone right here, marked by the lowest point of March. So it seems that most likely this level could act as a bit of a resistance. So previous support level, it now could take the role of resistance. So let's see if that's going to happen. If it does, then yep, we could see maybe another slide, if of course that barrier continues to provide a hold up. And yeah, if you're a little bit more on the cautious side, you could wait for a drop below the 26,861.62 territory right here. And then, yes, this break would confirm a forthcoming lower low, and potentially more sellers could join in, and we could maybe see a drop towards this lowest point of December of last year, near the 26,000 mark. But again, that's something maybe for next week. Let's see. Yeah, let's see where this one's gonna end today in relation to this 27,505 zone. Evo, I can see you in the chat room. Good morning to you too. Jumping into the German index, DAX, and yeah, this one declined yesterday. Look at this. I mean, we fell below this hurdle. The one that I talked about, the 15,456, and yeah, this of course kind of raised a few concerns, a few eyebrows here, and now it means that there could be a further move lower. But look at how well this level here, the low, the 21st of June, or in other words, the lowest point of June, played out, the 15,309 territory. The cash index right now is trading near the 15,477 territory, so that's above yesterday's close. So that means we're back above this this hurdle. In that case, well, what I'm going to look at here is I'm going to keep an eye on the weekly chart, and this is going to be very interesting to see today how all this is going to play out. But at the moment, guys, if by any chance we start falling back below this 15,456 territory right here, if we start falling back below it, then, well, I mean, I'll aim for the downside again. At least I'm going to aim for the lowest point of June again, the 15,309 zone. Oh, NASDAQ, just removed NASDAQ. Just bear with me one moment. There we go. Let's get it back into the list. So NASDAQ, yeah. Certainly the situation right now in the markets is very, very interesting, very tricky, because again, there are certain investors that are worried about the kind of that we've reached the peak already. Maybe it's time for a bit of a larger correction, which, to be honest, I wouldn't mind, because it would be a healthy correction before maybe another possible move higher. However, some other investors believe that maybe everything's not as good in general overall as it seems to be because of the potential of new lockdowns in the near future. And of course, there is another part of investors which still, let's say, stick to the Fed, and because there are no interest rate rises yet, so I mean the market could continue rallying. So yes, we could see maybe a little correction, like we did, for example, over the past 2 days here, which almost came close to testing this upside line here, taken from the low, the 19th of May, and yeah, we could see maybe a nice rebound and a push higher again. However, there's a lot of buts here, and we need to be very careful, I would say. And what I prefer to do at this moment, when there's like such uncertainty, I will stick to some of my levels, and basically if we get a break of this upside line and you see a drop below the 14,551 territory, now that's where it could become a little bit more interesting for a few more sellers, and yeah, potentially then we could aim for that 21-day EMA or even below that. But as long as it stays above this upside support line, well, there is still a good chance for a further move north. DXY, the dollar index. So yep, we had a bit of a decline. However, look at where we found a bit some refuge here, some support near the 92.33 territory. Now this level acted as a very nice area of resistance previously. Then of course it got a little bit violated here, but partially did its job, but here as a resistance again, and then now it's acting as a support. But either way, guys, I mean, still that doesn't work here for me. For me, what I need here is I need to see either a break of this downside line and a push above the 92.74 territory, or I need to see a drop below the 92 level here, and then yes, we could go for a larger correction to the downside. Until we're here, I'm taking a neutral stand. Gold. So gold is it's still kind of following the idea that I've mentioned in the beginning of this week, and the idea was that if it finds resistance somewhere near that 200-day EMA or this downside resistance line taken from the high of the 7th of August of 2020, if we find a holdup somewhere here, then basically yes, maybe another slide actually could be possible. But of course, a lot will depend on the US dollar as well, so we'll have to just kind of keep an eye on that one. And yeah, I mean, for now, I'm just probably gonna repeat myself, guys. I mean, you've heard this you heard this story throughout this whole week, that basically for now I'm kind of I'm cautiously bearish, just because we're currently getting a hold up here. But if we clear this area, then and we push higher, then yes, of course, I'll start looking at slightly higher levels. Silver, yep, silver is drifting nicely to the downside, so yep, that's kind of great news here for the sellers, of course. Yeah, I mean, looking at this picture, you can see why I was leaning a little bit more towards the downside in the first place, because basically if we just have a look at this little pattern here, we can see that we had a bit of a decline here, a strong decline, then we had some consolidation, and to be honest, according to all the TA rules, these tend to break into the in the direction of the prevailing trend. So in this case, the prevailing trend was to the downside, then we had a bit of consolidation, and now we're kind of moving lower. However, certainly, as always in the markets, you just kind of need to be, you know, take everything with a pinch of salt, and not every time everything seems, I mean, sometimes it seems very clear, but I mean, not every time it is like it's supposed to be. But I mean, you know that yourselves, guys, better than anybody. But yeah, for now, I mean, yes, let's put it this way: if we drop below this 25,071 territory, then yes, we'll go for some lower levels. We'll aim for that 200-day EMA. But if that gets cleared, of course, then yes, further declines are possible. However, if we somehow get a hold up near this 200-day EMA or around this territory, like for example we had here back in the end of March, this is where maybe we could see a nice reversal and a push higher. But again, for that, first we need to see something like this happening, and then we'll go from there. Now jumping into WTI oil, and yep, a bit of recovery, here, and we climbed back above this 72.68 territory, 70. Then yep, I talked about this one, and we climbed back above the 200-day, 21-day EMA, which is quite interesting. And not saying that here we are kind of going to get very positive again, but what I'll probably consider here is something like this. There we go. And yep, for now I would say if we push higher, but we struggle to get back above this upside line taken from the low of the 27th of May, then yep, maybe we could see another something like this happening, where we could see another slide. For the upside, I would need to see, of course, the daily candle staying above the upside line, and then yes, we could maybe start considering an up move again. Bitcoin Cash here is quite interesting, because on one hand we broke the downside line, but it wasn't a significant break. It was just kind of naturally we just moved to the right, and we just exited and kind of violated this downside line. So basically that what it means that we can get rid of it. It's no longer valid, and for now just probably focus on this little range situation that we're having here at the moment. The rate is currently stuck between the 468 territory and the 541 zone. So very tight range for Bitcoin Cash here, comparing to, of course, previous fluctuations. But again, let's see where this one's going to break out, and then we will take the next position accordingly. And yeah, then we'll, like I said, then we'll consider a further directional move. Now jumping into AUDJPY, guys. So we managed to reach my target. I spoke about this and recently, and when I was covering AUDJPY, and yep, I said that if we drop below this hurdle here, the 83.04 territory, then yes, my next target is the 82.29 or the 200-day EMA. Excuse me. Yep, we managed to reach that, so that's great news. Will we get something like this right now? So far we're getting that, but again, let's continue monitoring the situation in the equity world, because if the equities continue to slide, well, guess what? I mean, everybody will start jumping into yen again, and AUD and these pairs such where we have risk currencies together with the safe havens, then yes, I mean, we could see commodity linked currencies drifting to the downside, and yep, safe haven currencies like Japanese yen and the Swiss franc could get a little bit more stronger. So here the situation is basically this way. If we stay below the 200-day EMA, then yes, we'll go for some lower levels. I will aim for my next target will be here, so the 79.20, marked by the lowest point of January of 2020, or actually, is it the lowest point of? Oh no, sorry, that's not the lowest point of January. The lowest point of January is, let me just grab this line right here. I think it's right here, guys. So yep, that is correct. So that's the lowest point of January. So that's the 79.20 is the low of the 28th of January, but the 78.85 is the lowest point of January. So this could be quite an interesting area to target, because basically this level here, the 78.85, is also the lowest point of this year. And if this somehow turns around and we see the pair actually now falling into negative territory for the year, now this is where it could start being very interesting in terms of markets. And will it be that the markets will start shifting more towards risk-off environment? Well, again, let's not over speculate too much on this one. Let's wait and see. Let's see what's going to happen. But just a slight idea to put in your heads. Similar story here with AUDJPY. So you can see a huge decline here. So everything kind of worked out nicely here, I would say. The only thing is that it still didn't reach my target. My target is the lowest, again, probably not the lowest point, but let me just quickly reuse this line. And again, a similar story here with, there we go. So the low of the 28th of January, and below that, near the 0.6735, we have the lowest point of this year. And unlike with AUDJPY on this pair, we are already closer to that level. So there we go, guys. I mean, this is something for you to keep in mind, something to watch out, especially going into next week. So let's see how that's going to play out, guys. But for now, something for you to consider. USDJPY, very quickly. Continued to decline, and look at this beautiful move. We one of the levels got reached here. Look at this 109.72 territory getting tested, and now let's see if we can get a further move lower. My next target is the 109.20 near the low of the 8th of June, or even I think that's the lowest point of June. There we go. So that's the lowest point of June is my next target. So let's see if we can reach that. And for now, guys, although we're seeing a nice move higher here, this still could be seen as a temporary correction before another possible leg of selling. GBP USD here. Now, as you can see, there is a bit of a contradiction, basically. So GBP USD is drifting lower, USDJPY is drifting lower. So basically, as you understand, it's a problem of the weaker pound and the stronger yen. And basically here, I mean, the dollar is kind of flat, I would say. Not well, it's kind of fluctuating a little bit here, but you can see that the British pound is even weaker than the US dollar, and at the moment, of course. Now we're drifting lower. First of all, let's get rid of this downside line. We violated it, but didn't really move higher. So this line was just once again proved that it was a very tentative line. The main thing that I'm going to keep an eye on right now is, of course, this upside support line taken from the low of the 18th of May of 2020. We're approaching that upside line very quickly right now. So if we break it today and we start falling below the 1.3670 territory right here, now this is where it could become very ugly for a few more buyers, as more sellers could join in here. So keep that in mind, guys. If we do rebound from this upside line, then certainly the bulls could come in and drag this one higher. But in terms of levels, it's a bit of a messy chart here, I would say. So I mean, excuse me, my voice has gone down a little bit. In terms of let's say higher levels, of course, my preference would be to wait maybe for a push somewhere above this area, above the 1.39 zone right here. That's the high of this week. But again, if we climb above that, yes, we'll aim for some higher levels, but this still could be seen as a bit of a corrective here move to the upside, because we have this little downside resistance line, which could still provide a holdup. And all this area right here would be a small one, of course, but maybe that would be enough for you guys. I mean, this around 100 pips, so yeah, might as well kind of work out. But again, listen, like I said, for the upside, I will wait for a push above this barrier first. Now jumping into Euro Aussie, and here we had a beautiful pop here above this 1.5873 territory. I spoke about that level. So yep, basically we cleared that area, and now let's see where we're gonna go further, guys. For now, I mean, we are sticking to the upside, not because we're strong believers in the euro right now, but it's just that the weaker, the commodity linked currencies are on the weaker side. So for now, I mean, like I said, we're going to aim for that well, we already reached one of my targets here, the 1.5947, but my next target is the 1.6030 zone, marked by the high of the 4th of January. And if I'm not mistaken, that is also the highest point of January of this year. So yep, we're coming very close again. There is a possibility we could see this pair pushing into positive territory for the year. EURCHF. So EURCHF, we had a nice push here to the downside. As you can see, it worked out perfectly here. So to be honest, I can see that I'm running out of time a little bit, so I'll have to just fly through these two. But basically, we reached the target, we broke this upside line, and we reached the lower side of the falling channel. But now the big question: can we see a reversal? For now, I would say like this: that if it stays below the lower side of the falling channel, I will continue targeting the downside, guys. And for the EURUSD, as always, as you can see, we pushed higher yesterday, but we failed to kind of overcome and stay this above this 1.1847 territory right here. And now we're drifting a little bit to the downside. However, because it's a very tricky situation here, I will take a neutral stand, to be honest. And for me, for the downside, I would need to see a nice good drop again below the 1.1794 territory right here. For the upside, I would prefer to wait for a push above the 1.1878 territory right here, and then we'll take it from there. So guys, unfortunately, I have to kind of finish here. Thank you very much for watching and listening. I really appreciate your time. Have a wonderful weekend. Stay safe. Stay safe in general. Have your stop losses in place, and everything will be fine. Have a wonderful weekend, and I'll see you on Monday. Thank you very much, and bye-bye.